Hi, I'm Neil Carstairs from Mortgage Corp, your mortgage property investment specialist. Today we're going to take a little bit of a step back. Being an investor means that at some stage in your life you would have had to buy your first property. Buying your first property is so daunting. You get people at barbecues telling you, oh, you need to do this and you need this much money and you need to do that. It gets very overwhelming. So at Mortgage Corp, we've tried to provide our clients with as much information as possible on our Facebook page, on our website. Today, I'm going to give you a bit of an overview as a first home buyer, what you would expect to need to do for your first home. We get a lot of people that ring up, and I'm working with a few clients now who've said, I've got 5% in the bank, I got told I can borrow 95%, I've put a deposit on a house and I need some finance. Luckily, someone at the barbecue told them to put subject to finance, so that helps. In this scenario, I've got my little note sheet here. We've run some numbers to give you an idea of what you need to expect as a first home buyer when purchasing your first home. If this gets overwhelming, being a video, you can watch it over and over and again and listen to my voice as many times as you like. We're going to give you a scenario on what we're seeing as the average first home buyer in Melbourne eastern suburbs for 2018. So the average price that we're seeing a lot of at the moment is around the $650,000 mark. Not that you can buy a lot for 650 grand, but it's a good starting point. We recently had a client who rang up and said, I want to buy a property for 650,000 and I've got 5% deposit. I've put an offer on a property subject to finance. You ripper. If he hadn't, I think we would be a little bit stressed out. But in this scenario, he was under the impression that at 5%, he had $32,500 in the bank and he was ready to rumble. Okay? Unfortunately, what a lot of people don't know is that there's a lot of factors that come into play when buying a property. Number one, we will sit down with our clients. We will guide you through the process. There are other people you need to talk to in that process. That's a solicitor or a conveyancer. If you want to talk to your accountant, that's fine. We have no problem with that. In this scenario, a solicitor would generally cost you, or conveyancer, between $500 and $1,000. You're going to hear that a lot. Some are $800, some are $750, plus disbursements. What you don't understand is that in this particular property purchase in Victoria, as a first home buyer, you've got stamp duty charges, which are around about $13,000. Okay, that includes mortgage registration. That includes title registration fees. Okay, it doesn't include your conveyancer or lawyer, or we call them solicitors or lawyers, which is usually $1,000. Then on top of that, you've got disbursements. Disbursements are things like bank check fees. Then you've got adjustments, which are things like where if you've purchased this particular house and the owner has paid his rates already, you have to reimburse him or her for some rates because you're now going to be occupying that property from a certain date. So they do all these adjustments at settlement. So always account for around about $2,500 plus or minus. That should generally cover you off in most scenarios. So already in this scenario, we are looking at where this particular client thought that he had $32,500, he could buy a property worth $650, didn't realise obviously that the stamp duty kicks in, that there was mortgage registration, land transfer fees, plus legal costs of another $2,500. We're already at what, $45,500, $47,000, $48,000. Okay? That is a long way away from where we were, where our client had $32,000 in the bank. Now's the next step. Even though he might have $48,000 in the bank, you've got to remember that lenders have policies on how much you can borrow based on two factors. Number one, your income. Your income determines how much you can borrow. Your deposit determines how much we can spend when we put those two together and we cover off all our fees and charges. So to give you an idea, on a $650,000 purchase, now there's not many lenders that go above 95%. In this case, we had to push the boundaries really hard with one of our lenders to take it up to 98%. Now, at 98%, you're not actually borrowing 98% of 650 in your pocket, okay, or sorry, in the bank's pocket that you're borrowing to pay them back. You're actually borrowing 98% plus, or sorry, in this scenario, including lender's mortgage insurance. So loans over 80%, there's a mortgage insurance premium, and it scales up. The more you borrow, it scales up. The percentage, the higher the percentage you borrow against the property. So to give you an idea, the LMI in this scenario that we did for our client required him to have a total amount of $53,000 plus, in this scenario, his LMI charges were $25,800 plus or minus. Now, I'm trying to be accurate as possible, but there are give and takes with different lenders on different premiums. But there's only a few lenders, as of March 2018, that are actually lending this 98% premium. Most lenders are at 95%, including LMI. So even if I was to consider that, at LMI being, say, 3%, that's only borrowing 92%. So I would need 8% plus costs being stamp duty, plus costs being legals, and any other disbursements. So essentially, buying your first house at $650,000 in Victoria in March 2018, we can't get away with this 5% deposit rule, okay? We can get away where this client now needs to come up with another $21,000 to complete the transaction. So coming to Mortgage Corp, we would have explained this to this particular client beforehand. We would have laid out a plan to show them the best way to get where they want to do by looking at their living expenses and asking them to complete a budget, talking them to about their solicitor's costs. So doing all the work up front to show you how and where the true costs of purchasing a property actually apply. Remembering, you can't borrow stamp duty. You can't borrow against it. It's a cost that must be deducted at settlement. So some banks will actually deduct that from the loan, but it's the same thing. In essence, you still need a rough idea of about this amount of money to purchase that particular property, give or take, in this time. On the flip side, if you were purchasing a property for under $600,000 in Victoria in March 2018, there would be no stamp duty. And the difference would be that when working out our numbers on a $600,000 property, I hope we can see this. So on $600,000, you would need to have the 5% deposit plus legals plus costs. Mortgage insurance would be $19,000 of LMI. Okay, and the loan amount would be roughly around 587, so you would need around about 33,000. So we are close on that benchmark of 600 grand with no stamp duty. As soon as we kick over, we have stamp duty charges are taken in place. I've covered off with some legal fees in there as well, and that would get that person over the line. So this would also determine the type of property that you're going to purchase. Under 600 versus 650 might get you a completely different property. So as a first home buyer, getting as much information as you can is really important. And at Mortgage Corp, we like to specialise in making sure our clients understand the process in what goes on into buying your first home. I'm Carstairs from Mortgage Corp, your property investment mortgage specialist. Have a fantastic day.